How many of you think that in investing, right, strategy is the most important? Or how many of you do not agree that strategy is the most important? Uh, for me personally, I feel that it is important. However, the most important for me is your emotion. Many investors around the world, right, they are losing a lot of money purely because they have become very irrational when the market is not reacting to the way they perceive it's supposed to react. So this is what we call by the disconnection. So today I prepared something for you. It is basically called the Psychological Pitfalls of a Market Cycle. So this is an article that I read online, and I think that it is one of the most comprehensive emotions that investors will feel regarding fear or greed. So let's go into it. Share a bit more why I shared this, right? It's very simple. Being a seasoned investor myself over the last 10 over years, right? Recently in March or April, I actually deployed close to 100 over 1,000 investment capital into the market. And as of now, I'm probably profit at close to 28%, which is a 30 grand profit. You can see it in my social media, depending on where you are watching this video, or either to have a look at it. But I'm not going to elaborate how I did it, but I need you to understand that to be able to invest well is all about emotion. And this is something that a lot of investors don't know. During good times, right, there's one thing that you need to understand. You need to prepare for bad times because you need to take full advantage of the crisis that could be coming. And of course, during a crisis mode, you need to understand how to invest in the way what I call by crisis investing, and take full advantage and capitalize on this current situation that cost me, not cost me now, that made me 30% or 30 grand during this period over the last 5 months. So going straight into the emotions that an investor will feel. So these are the 4 stages. So I'm going to go straight into the first stage. The first stage is basically disbelief, uncertainty, and optimism. So why this is very important, right? What is disbelief? Disbelief is basically over there indicated after several losses. The fear of losing more money outweighs all else. So what's going to happen is you might feel a bit of FOMO when the market starts to move slightly higher. And when it goes higher, then you will go to the second part of stage 1, which is uncertainty. It means that you become very hesitant, you worry that you miss the optimum window to enter to the market, which means during this period, this is where you feel the most FOMO because the greed is coming in, creeping in your heart. And then next you'll see that, hey, it's going up again. Then you become optimistic. It's like, hey, all the fear that you have went through is all gone. Why? Because the sentiment starts to build up, and only through price rises or price increase. But the thing is, in terms of getting into investment, what you need to know is that you need to be rational. You need to understand this thing, what Warren Buffett always say. Price is what you pay, value is what you get. Are you getting into a company purely through excitement? Or are you getting into the company due to the due diligence work that you have done? So this is something you need to take note. And the second stage is what? Enthusiasm, euphoria, and overconfidence. So when the market starts to go higher and higher, people will go into this stage, what I call by Superman mode. They will feel like, hey, I'm not going to be wrong, and you will keep adding position even into the stage of enthusiasm or euphoria. And the problem with this euphoria stage is that you have this emotion right there. It feels like you're undefeatable. And when markets start to come down due to high valuation of the business, you will not see it yourself. You continue to add position thinking that it is a correction. There are ways to determine whether it's a correction or not. But more important is invest in the companies that you can understand, which is one of the fundamental truth or principle of Warren Buffett. If you invest in company over the long term, that's where you understand how this business can grow, either through crisis mode or a non-crisis period, which means the market is doing very well. So during this stage, try to have a very disciplined way of investing. of getting into the market. Like for example, if you are in the profit already, you might want to think of a few things. It's like, do you want to get out of the position? Why you probably want to get out is so that if the market starts to come down, you can use the profits that you generated and add more position. This is why I call buy discipline. Many investors out there, they always look at profit and not the losses. They get in purely, they think that they can make 10, 20, 40% from the capital they put in. But the problem is they do not take note of the potential losses. And regarding losses, right, is what we call by cut loss. You need to do two things for losses. One, you need to ascertain what is the amount. First, then are you willing to take the risk? And then secondly, are you able, right? So there's a willingness regarding stop loss, likely the capability. It's like, for example, 10% you are willing to lose. What if I tell you 10% is 10 grand? Then probably you will think twice about it. You know what I mean? So that's the main question when we try to deal with this stage, which means we have to find a framework that we can be very disciplined about. And the next two stages, right, is regarding this thing called fear. So first or the third stage of which is going to fear is where you have anxiety. When you see more losses coming down and going to denial, right? Means you deny all the warning signs that the business is failing or the market is telling you. And then you went into this mode called panic mode. So this is exactly a company that I shared recently in my IGTV together with Angel, my daughter. This company called Kodak. In July, within 2 days, it shot up from $250 all the way to $60 and hover around $30. And after a few, maybe a couple, 1 or 2 or 3 weeks on the 15th of August, I last checked, it went all the way down to $850. Why was this a crazy move by the market, right? It's purely there was a deal that the government is going to give to a contract given to Kodak. But my only question is that, is this an ongoing contract? If it's not, I will probably think that let's avoid it. I might want to get into Kodak assuming the second contract comes in. But for now, I will totally ignore them because it's not a sustainable way to keep getting all these big deals from the government. Okay. Then the last stage, right, is where is the stage of really depression, right? It's like the investors lose all hope. What do you mean? So you look at the 3 words over there, capitulation, agony, and depression. Means investors like Kodak, they wanted to go in for a quick investment or quick trade. Those kind are not, I call by investment. It's just like you are trying to gamble your money. They want to get in and get out quickly. And then today, right, they think that, okay, why not become a long-term investor? If the companies that you are investing today is in this format, right, I assume that you should do something about it. Or even seek some advice from myself or the people who understand investing. Because it doesn't make sense for you to suddenly from a short-term investor or a short-term trader to become a long-term investor. So I typically do not want to invest in companies like this. It's like a windfall, that type of investment. It should not be. Investment should be something where it's more stable, that the P&L is very consistent and is very predictable, and then cash flow is very sustainable. So these are the 3 things that I look at on the companies that I invest. And that's how you can become a more smart and savvy investor. Cool. This is exactly how I replicate my success over the last 10 over years and continue to help people like yourself if you're listening to this video. So to really guide you through that is to the last stage is really understand, right? For all the due diligence you have done, not all investment is going to make money. What you need is a high 70 to 80% chances of making money. And while you are in the companies that you are investing, you need to know how you can stay long-term. Long-term in terms of like, are you going to just buy and hold all the way? Or as it goes higher and higher, you are going to stack up more position, right? Because there are companies today are giving us dividend. So that's another strategy that you can look to do. So I really hope that this sharing of mine really helped you to really understand what could be the potential pitfalls in details. But generally, it's always the fear and the greed that all investors will feel. If you think that this video will help you in the first place, I'm pretty sure that it will help many people that is in your network. So please help me to like, share, and subscribe to my channel and turn on the notification for future videos. I would love to help you through your journey, and do comment below to tell me in what way I can help you more. Okay, cool. Thank you for your time. Bye-bye.